All right, back to JPMorgan Asset Management's Gabriela Santos, who's here. Okay, 50 to 60% chance recession, and says your utilities trade, sure, it's been working, but that's not a good sign.
A few things stood out to me.
Okay, the floor is yours. You tell us.
Thank you. So the recession probabilities are so tricky, right, to assign a certain probability. We are not at the over 50%, meaning we don't think it's the most likely scenario, but we do think it has moved up versus a month ago, which is to say there's more downside risk to the base case of 2% growth. I think this discussion about soft versus hard data is really interesting. I don't think it's just about consumer confidence not lining up to consumer spending. It's also been the ISM. If you look since the pandemic, ISM services manufacturing would have suggested a stagnant economy. Instead, we got above potential growth. So we'd be careful with extrapolating the soft data all the way out into recession probabilities or specific growth estimates, but there's clearly more downside risk. In terms of utilities and more defensive stocks doing well, utilities, healthcare, for example, you were making fun of me about it not being overly exciting, but I'll link it to something that was just mentioned around real assets, because I think the most exciting way to actually express a lot of the themes inherent in the utility sector is within private markets, within infrastructure. So if you own an infrastructure asset, you benefit as a recession hedge because you got to keep the lights on. People will keep paying you. You benefit as an inflation hedge because you're allowed to raise your utility prices. And, hey, kicker, maybe there's also some capital appreciation coming from this rise in electricity demand for the first time in 20, 30 years.
What about, lastly, before I let you go, his comment that, yes, we've seen a lot of upset in those high momentum names, and in his mind, as you heard, the de-risking is not over.
I agree. I think this has not been about the market pricing in a recession at all. The stocks outside the Magnificent Seven are only down 3% from their February 19th all-time highs. This has been about a momentum unwind in the Mag 7. I would put banks in that. Remember how well they did last year. And what happened? Really, the Mag 7, for example, peaked Christmas Eve. And what happened since then? Earnings surprises came down. Great is not excellent enough. And we had DeepSeek Monday, which is a reminder that disruption in these technological breakthrough moments is a feature, not a bug of innovation. So I think it's been much more about a momentum unwind from growth to value, U.S. to international, stocks to bonds. After very concentrated years, I think there's more to go in that. There's also more room in case growth does slow down a lot more, and we want to make sure we have some quality defenders.
All right, we'll leave it there. You're the best. Thanks for your flexibility today. We greatly appreciate it. Gabriela Santos.